What's up, YouTube? Listen, man, I'm tapping in on the weekend, guys, just to check in with the family, guys. Listen, man, we had a pretty decent week this past week, but I'm not a guy that looking at review, so I'm always looking ahead, which means, guys, I want you guys to be locked, loaded, and ready to go for this upcoming week. But with that being said, man, major salute to those of you that did do your thing on this past week, those of you that got your feet wet on this past week, and those of you that even had lessons that you learned. We had a phenomenal time in the Discord late night on yesterday, and just hearing from everybody that chimed in and tapped in. Again, it was just rewarding and refreshing just to hear where you guys are at on your journey, okay? So listen, guys, it's a marathon, as I say, each and every day, but understand things will improve the more you guys get experience, the more you guys put in the time. And again, everything you go through is part of the learning curve, so stay the course. With that being said, guys, a few things that I want to more or less kind of reiterate on this weekend as we again head into another week in the stock market. Number one on my list is the fact that, guys, not only do I see another 75 basis point rate hike in the equation, if not at least 50 basis points coming up for the month of July, okay? Then, guys, September is going to be where I'm really looking for a shift, a change in tone, even a pivot, okay? But with that being said, what does that mean for us around here? All right, I have said from the jump, man, I see another 12 to 15% down from here, which means around here we got a chance to do a couple things. Of course, dollar cost average, that's first and foremost, meaning into quality companies that you know, like, and love, companies that are part of your pillars, part of your long-term portfolio. Bear markets are when you build, bear markets are when you want to be investing, okay? Of course, you guys know with me, in addition to investing, we dabble in options and we like to do our thing in those, okay, to make some money despite stocks falling on an overall basis, okay? But with that being said, guys, with another at least 12 to 15% to the downside, I don't want you to be doom and gloom. This is not about fear mongering. This is not about creating fear, uncertainty, and doubt. This is more or less making sure you guys know what's ahead, okay? I'm always about preparation, okay? Because if you are prepared for what's to come, it won't catch you off guard as much. And so, for instance, the way I call out certain prices for us, okay, certain levels, certain price targets, like NVIDIA to 150, but I saw it come and test that 141 level, okay? So again, look for a retest. Apple, I've been calling out 140 all year. It came down as close as 129. Far as how far it went down, look for that to possibly retest it once again when that downtrend starts happening, okay? That's just preparation, all right? I want you to be thinking like, man, I get a chance to get companies that I know, like, and love at cheaper prices, okay? So I want that to be top of mind for you guys in terms of those of you that are looking to build long-term wealth. You are going to still have chance to get the stocks you love at lower prices, at better valuations, especially as these multiples come down, okay? The last thing I want to put on you guys is the fact that, speaking of multiples, okay, those have to come down. I'm talking about earning estimates, what Wall Street project the stock market to do, what companies are going to do. Those are the next things that needs to take place. And with that being on the horizon, that's going to be the reason for that 12 to 15% move downward to kind of total us out at around 35%, 37%, if you will. Again, can't time it, but I want to give you guys something to think about as a roundabout range, as from the top to the bottom, where you think these overall downtrends will go to, okay? And that basically takes us back to pre-pandemic levels. If you guys just who want to look at the charts and want to know where those levels are at, go back and look at where the stock market was at before COVID and before we got all the stimulus checks, and go look at what stock prices were then, so that you can kind of know where we're going, all right? With that being said, that's the warning, guys. That's the warning. So I want you to take all of these dead cat bounces and these bear market rallies with a grain of salt. Of course, I want to relish in the victories that we are able to capitalize when we see plays making moves. But nevertheless, I want you to have a holistic viewpoint of still everything that's at play. Therefore, around here, I want you to be prepared to make money both to the upside and the downside. And with that being said, that just simply means be ready to do calls and puts based on what the market gives us. Okay, let's not complicate the game. Let's take what they give us, understand the trend is your friend. And again, when we see opportunities that we like, we have to be ready to strike, okay? That's what it's all about. Listen, guys, up next is our word of the day. And our word of the day is unrealized losses. Listen, guys, in the stock market, you are going to have bull markets. A bull market is when the stock market is going up, okay? And then you're going to have bear markets. So what that does and what that means, investors, we look at it as a chance to, one, you're going to see prices reset. You're going to see stocks was down here, they shot way up here. Now they're getting reset or corrected back down to lower levels. You're going to see that take place in a bear market. But also what you have is an opportunity to build your long-term wealth by buying stocks that you plan to hold for 3 to 5 years or longer in a bear market, okay? So with that being said, you will have and experience unrealized losses. That means your portfolio value might have been at 16,000, but due to the downtrending nature of the market, it may come down as low as 9,000, okay? And so again, it's not something that you want to kind of be up in arms about. You just want to know, damn, my portfolio has come down in value due to the market overall coming down. I'm holding some of these plays. Some of these plays I'm going to invest more in dollar cost average. Some of these plays I'm waiting till they return to a level where I can get out at a break even or even a smaller loss in some cases, okay, if not a small profit. But the unrealized loss is what comes with the territory. So you will see from Warren Buffett to Ray Dalio to Mark Cuban, you will see the best of the best, the most wealthiest. You will see all of their values come down, and especially us little retailers. You'll see that with us. But what we all are doing is we have options on the side. So if you got Apple and you got Apple at 150, we also have a put on Apple since 150, and you've been making money trying to offset or hedge against that all the way to the downside, knowing that, like I've been telling you guys, since Apple was 180, Apple will come to 140 and then eventually 120. Or when Tesla was 1100, I was saying Tesla's going to come to 910, 880, 780, 680, 580, and then 420. Okay, so although all those levels, most of them has been hit, but what we're doing in our portfolios, okay, you hedge against that. Okay, so you try to offset some of the loss. And sometimes, man, the market will have a dead cat bounce or a bear market rally, so it can mess up that play. So again, you don't just sit in it the whole time, but throughout the year, throughout the whole cycle of trading, you might be hedging, and that's one way you can do it. Okay, also you can sell cover calls on some of your plays as well. Again, that's another strategy that many like to use. But with that being said, guys, unrealized losses on your portfolio value comes with the territory. Please don't let that demoralize you in a way that it deters you from the stock market altogether. I remember when 2020 hit, and people that went through that for the first time were freaking out, and people was like, Chris, my 401k value has went down $50,000. I lost $25,000. One, you didn't officially lose it. That's that unrealized loss we're talking about. Two, those that held saw it come all the way back, make a full recovery, and then make all new all-time highs and continue higher. Okay, that's typically what will happen for most people when you go through these cycles. Okay, that's why I try to show up so I can show you guys, this has come with the cycle. Okay, this comes with the territory. If anybody is showing their portfolios, you will see the majority of them are down paper loss, unrealized loss. Not that their value just is down because some of their long-term holdings have come down, okay? And so those things will be restored once the bear market cycle ends and once the bull trend begins, okay? Hope that was helpful, guys. Listen, man, don't hesitate to tap into one-on-one coaching if you need it, guys. But remember, around here, man, when they sleep, we eat. When they panic, we pounce. We make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below. And I'll catch you guys in the next one. Peace.